Hi, good morning, good afternoon, good evening, depending on the part of the world you're watching this from. This is your boy, Bearable King, and I'm here once again to share the weekly review of what I'm expecting from the market. As we're doing that, we'll be looking at what happened last week as well in the market. But before we go straight into the charts, let's look at the news for this week first. So for this week, currently we have lesser news. Um, what we have on my screen right now are the news, high impact news this week for pounds, US dollar, and euros. And unlike last week we had a lot of high impact news that actually moved the market. Okay, so last week we had the customer performance index year on year, month on month. We had the core performance index, we had FOMC. I mean, last week was a bloodbath in the market. A lot of people lost accounts, a lot of people made money as well. But for me, if you remember in my last video, I said I was going to stay aside for most of the news, which is what I did. I was able to take a few trades here and there, and I was able to make roughly about 400 pips. I don't know. Comment below on what you were able to make from the market. But last week was good for me and for people who are on my Telegram channel. But let's move forward. Let's move forward. The past is the past. This week is a new week, and as you know, past performance does not ascertain future outcomes. So we keep working to get better every single day. Okay, so right now I'm looking at the news. Monday is a US holiday, so there's a high probability that the market will be slow on Monday. Tuesday there is no news at all. So what happens is this: when there is no fundamental news to move the market, most of the time the forces of supply and demand is what moves the market. But when there is a major fundamental news that is coming out that is of interest to liquidity providers are individuals like hedge funds, major banks in the world who have the funds to actually move the market. All right. So when news like that are coming out, most of the time they sit on their hands to wait for the impact of the news, then they take advantage of the market. And when they are taking advantage of the market, they don't just take advantage of the market. Most of the time, they move the market in the opposite direction so that they can hunt the SLs of traders that are trading along with them who came into the market before them, and then deceive traders who believe that the market was moving in the opposite direction so that they can maximize their outcome from the market. This is a logical way to think about it. So that happened last week, but this week, if you can look at the chart, majorly we have more news on pounds this week, few on US dollar. So the major news on US dollar that is going to come out will be on Wednesday when Federal Chairman Powell will be speaking, but this is subjective because it's not data driven. So depending on what he says, the market may move. So the impact may not be that much. The next one that is of importance is the news on Thursday, unemployment claim. Aside from the British pounds news that is coming out by 12 p.m. that same day. Then Friday we have a lot of news on flash manufacturing from euro, pounds, and dollar. So we don't expect the fundamentals to have high impact on the market this week as they did last week, which is the reason why a lot of new traders are usually advised not to trade the market during the first week and during the last week, because that's when there are a lot of hunts and there are a lot of manipulations in the market. But like this week right now, this week being 18th to 24th is in the middle of the month and there are lesser news, so the technicals are bound to move more during this period than usual. Okay, all right, fantastic. Now let's move straight into our charts. And to move into our charts, I just switched. Right now, this is British pounds, but I don't want to start with this. I'm going to go to dollar. Okay. All right. So if you've been following my channel and if you've been following everything I've been doing, you know that I majorly just trade three pairs: the gold, which is XAUUSD, British pounds US dollar, which is GBPUSD, and euro dollar, which is euros dollar. Okay. Now, I spoke about this. This is the weekly time frame. The reason why I'm going to the weekly time frame is to make people understand what I am seeing. A lot of people don't see what I see, so most of the time when I see the market is going to buy, in as much as the market is falling, they usually don't understand. And a top to bottom analysis usually helps with this. Okay, so this is the weekly time frame, and on the weekly time frame I mentioned that the market was ranging. The market had started ranging as far back as 2020. The market came down, the market came up, then came down to the same point, and then we had a rejection here, and now the market topped up here. And in this situation, I'm expecting, as I've said from the onset, if you're not clear about this, go and watch my June video. I mentioned that I was expecting that the market was going to move up. Okay, I said that the market was going to move up from here, that I was going to fall a bit, then move up from here to break this zone, because we're going as high as 2,400, 2,500. Now, fundamentally, we are all aware that China and Russia are trying to bring gold back to the world as the world currency and take it away from dollar. And that may likely happen. And if that happens, the value of gold is going to fly to the moon. And if that happens, then we can look at a chart to see where we can take advantage of that fundamental news from. Now, let's look at this. From this top here, the market pulled back and then they were ring and came down from here. Okay, it came down and dropped to this point. Okay, all right. So here's what happened, right? We had the price here. This was March 2022. The price dropped. Then the market came up, dropped below, came here, dropped, then pulled back here, came down, then came up here, came down here, retested this point, gave us an equal low here, then did what? Broke out here, pulled back, came up to this point. Okay, then pulled back here before coming up here. Okay, so based on this trend line is no longer valid, so I'm going to delete this. I'm now going to draw the new trend line. Now, the new trend line is from down here to this point. Okay, now a lot of people would ask, why didn't I draw the trend line here? I'll give you an answer right now. Now, the reason why I drew the trend line like this is because from here, this is the last high and this is the last low. This is an insignificant move because it created an equal low, so it's not a valid low. This is an insignificant high because it's in between the last high and low. So this is the high, this is the low, this is the higher high, this is the higher low, which confirms that we're now in an upward trend. Okay, now that we have an upward trend, okay, we now had the price here, and from here I mentioned that I was expecting that the price would do what? Move up from here. So we have this support level here. I drew this so that I'll use it to explain top up part or the recent part. So we had the price pull down here, made this place a support. This support bounced up. Then what happened? This support was broken. And after this support was broken, it served as a resistance here. And what happened? The market fell down further. Now, by the time the price got back here, you can see that there was a lot of indecision candles. This is a doji, this is like a doji, this is a hammer confirming that the bulls are here. And what happened? The market moved up to this level, and from this point, what happened? The price came back to retest this point as support. At this point, this place became a resistance. All right, this place became a resistance, and it was tested as what? Support. And after it was tested as support, what happened? The price now broke above it. Now that this place was tested as a resistance, this is the first time this point was tested as a resistance. This is the second time this part was tested as a support. This breakout simply tells us that what? This price is going to come back, land on this previous resistance, now support, because it has broken it. And then from here, what do we expect? We expect the price to move up. So that's the reason why I have this here, to show you that as long as this price stays above this box, which is within 1941 and 1927, there is a probability that what? The price is going to continue going higher. Okay, now I also want to talk about reversal candlesticks here. So we had a bullish candlestick, we had a bearish candlestick, we had another bearish candlestick, and after the bearish candlestick we had a what? A doji. A doji. This is a doji here because it's an indecision candle followed by a bullish candle. This bullish candle is an indication that the price does what? Wants to reverse. Is an indication that the price wants to do what? Reverse. Now after this, what now happens? We now have a hammer here. Now this hammer is an indication that the price is rejecting this support, meaning that the price wants to bounce off this support. This week, what am I expecting? I'm expecting a strong bullish candle here, a strong bullish candle that may push the price upwards and actually move towards breaking this supply zone. So this is what I'm expecting on the weekly time frame. But as you know, I don't trade on the weekly time frame because we do this frequently. We have to come down to the 4-hour time frame. So I'm going to go to the daily time frame now so that we can also look at the chart further. Okay, now we had our 1, 2, 3 push, and then the price came down here. Now when the price came down here, we had a pull back up here. Let me show you this. So the price came from here, came down here, pulled up here, stayed here a bit, then did what? Came to the second lower point. Then from here it pulled up to this point. Then from here came back down. Then after it came back down, it came up, came down, came up, came down, and right now we have the market pull up to this midpoint. From this midpoint, what I'm expecting is that the market is still going to pull up here. This is 1980 zone. I've always been about this zone from like 2 weeks ago. I mentioned it the first time about 2 weeks ago when I was talking about a possible head and shoulder somewhere around here, but that didn't hold. So for now, I'm still expecting the price to come up to this 1982 before we may have a pullback, and then after the pullback we may now have the price pull upwards. And the reason why I'm expecting a move like this is because we have a slight pullback here. All right, they say if you want to trade right, look left. So I'm simply just looking at the left. Okay, before the market moved in this range, what did it do before? This was what happened in the market. So I'm anticipating that from here the market may pull up to this point. We may see a rejection here. It may pull back down to 1950, 954. Then from here we may see a bullish push up north. Okay, so this is what I'm anticipating on the daily time frame. Also, the reason why I'm expecting a rejection around here is simple. As you can see here, this is a support level because it has served as a support here, it served as a support here, it served as a support here, it served as a support here. You can see that this is a rejection setup, this is a rejection setup, this is a rejection setup. the last rejection setup we had, or the previous rejection setup we had, was a bullish engulfing candlestick. And aside from this bullish engulfing candlestick, now what we have here is a morning star setup. Since we have a morning star setup, we can anticipate that this market is going to move all the way to this top point. It's actually a no-brainer if you ask me. All right, now let's move to the 4-hour time frame. Okay, so this is the 4-hour time frame. Let me zoom out. So um, I actually marked it. What I just simply did was I broke this range because from this point to this point is actually the overall range, but we had a mid-range level. So I named it first hemisphere, second hemisphere. The name doesn't matter. You can name it first leg, second leg. You can name it first half, second half. It really doesn't matter. It's just for easy understanding. Okay, the labeling doesn't matter. I'm not going to start labeling names today. I'm not going to start creating names today. So what we had here was the market moved from this top point, came down to this point, gave a small pullback and did what? Came to this point, rained a bit, then fell to this midline. From this midline, what happened? The price moved up, and after the upward movement, what happened? The price came down, came up here, came down, gave a slight pullback and did what? Came down like this. Okay, now I want you to observe this. Observe this. The market did this, which is like a W, before the market came up here, pulled out, pulled back, did this, came here, and then came up here. Okay, now after it did this, what happened? The market now started coming down, down, but it didn't touch this bottom. Rather, what happened? They stayed here, pulled up back to this point, came down, pulled up, came down, pulled up, came down, pulled up, came down. And this is the reason why I mentioned last week that people should not trade, because when you're in the middle of the range, you have something what we call bear bull battle. Bear bull battle simply means that it's an area where the bears and bulls are fighting for dominance. Okay, it's an area where the bears and the bulls they fight for dominance. That's what a range market is. If the trend is an upward trend, right? If it's an upward trend, you don't there's no battle here. The bulls are in charge. Okay? And if the trend is a downward trend, like this, if the trend is a downward trend, there's no battle. The bears are in charge. Okay? But once the market starts giving you equal highs and lows, once the market starts giving you equal highs and lows, then there's a battle between the bears and the bulls for dominance. When the trend is upwards, the bulls are dominating. That's what it simply means. When the trend is downward, the bears are dominating. When the market is ranging, nobody is dominating. So someone is eventually going to take over. Either the bears will take over or the bull will take over. And that's the reason why we normally tell traders, especially new traders, when you have an uptrend, you buy. When you have a downtrend, you sell. When the market is ranging, stay out of the market because you do not know who would win. Now, if you check your statistics or your records or you do journaling, you find out that most of the time when you lose money, when the market is in a trend, you rarely lose money because you can see if it's going up or it's coming down. But most of the time when most traders lose money is when the market is doing what? When the market is ranging. So in this situation, people would have said, oh, the market is about to break, and what happens? The market sells. Oh, the market is now about to sell. What happens? The market buys. Oh, the market is now buying. The market sells. So this is an opportunity for liquidity providers to make money. And what I did last week was this. I said I had a bullish bias and that I was waiting for this trend to be broken. That was what I posted last week. I said I was waiting for this trend to be broken. which is the bounce here, rejection here. This is a week, so it doesn't count. Then a pullback here, rejection, pullback here, rejection, here, rejection. And I said when it breaks, like here we had a break here, and then we had a bullish candle pushing it above. And I said we'll wait for the pullback and do what, buy. And this was what was given to us on Friday evening. So right now, I'm expecting this market to pull up to this point. As I said earlier, for you to trade right, you need to look what, left. So the reason why I'm expecting a range like this is because initially, when this market was going to move, we had an M here. When this market was going to move, we had an M here, right? And we had another M here, okay? This M here pushed the price down, and here we had a W, okay? But even as we had a W, we now had a double bottom here, which is what this arrow stands for. So we had double bottoms here and here. Now, what we am now expecting here is possibly a W. What I'm expecting here is possibly a W here before the market breaks out. I'm simply looking here to trade here, okay? Now, remember what you saw here, that the market did a W and then they were broke up, came back, tested it twice before pushing up. Now, I have a W here. What now happened? The market pushed up slightly, almost the same height with this, almost the same height, and then did what? This. So what should I be expecting? I should be expecting that the market will move up the same way it has moved up here, okay? So what I'm just saying is the market is most likely going to repeat what it has done here. It's most likely going to repeat it here. So starting from Monday, we may see the market range a bit, but for every pullback towards this area, I'll be looking for a buy towards 1982, which is 1982. Then if I get a reversal candlestick pattern, I'll be looking for a sell to the downside. And once we do this and I get the price here again, I'll be looking for a buy, simply following what has happened here before. And when the price breaks above this point, every pullback I get, I'll be looking for a buy to this upside. Every pullback I get, I'll be looking for a buy to this upside. This is what I am expecting on gold for this week. Okay, now let's move to the next one, and the next one would be pounds. Now for pounds, if you can remember, I've been bullish in on pounds as far back as last month, being May 2023. And in June, I also mentioned that we're going to have a bullish move in the month of June. And that's because if you check the monthly time frame, right, we had a bullish engulfing here and a bullish candle. So I said this pullback was not going to hold and that we're going to expect the market to be bullish. So anybody who started buying um, British pounds as far back as June 1 should be up about 450 pips by now. All right, that's the reason why it's good to watch the analysis on June, the monthly analysis, because the monthly analysis will tell you what to expect from the market. Okay, all right, now let's go back to the weekly chart. On the weekly chart, we had a resistance here, we had a resistance here, okay, and we had a bullish push up. We had this as a trend line, mini trend line. So what am I expecting? I'm expecting that this week may be bullish as well. You know, in as much as this candlestick is above it, this next candlestick will determine if this candle actually broke this trend line. Okay, so if I have a bullish week this week, then I would say, all right, confirmed, this resistance has been broken, this mini resistance has been broken, then we may expect a pullback, say next upper week and next 2 weeks. Then say maybe around July 23rd, that period, the price will be somewhere around here. We get a nice rejection, then we can take a long-term buy from like 1.2644 to 1.334 or 1.376. All right, so what am I saying? I'm saying we need a bullish candlestick above this line. This just broke it, but if we have a bearish engulfing candlestick back into it, then it means that this trend line has not been broken. Okay, but if this week ends up being bullish and the candle goes above it, then we know that it has been broken. So we would expect that the market will come and retest it as a support. And if it does retest it as a support, then we can look for a buy somewhere around here for roughly 600-700 to 1,100 pips. So this would be a swing buy. You can note it down and keep it somewhere long term. Okay, all right, now moving to the daily time frame. On the daily time frame, if you recall, I spoke about this movement giving us an equal high and equal low here, equal high and equal low here. And after this, what happened? The price came up here and started ranging towards the upper side before we had a proper break here. And after this break, I mentioned around May that we would expect a pullback here where this resistance would become support. And when we have a support, then what happens? We expect the market to move up. This is an example of what I'm talking about. So you can see this candlestick, it came up, came back down, came up, came back down. At this point, the price had not broken this resistance level. The break actually happened when we had this bullish candlestick creating a new high, this pullback above it and creating a proper high before this market now came back to retest it as a support. Let me move this here. Before it came back to retest it as a support, and what happened? The price started doing what? Moving upwards. Okay, now the market has been moving upwards since last week, and as it's been moving upwards, right here we have what we call an order block or a demand zone. So at some point in time, this price is going to come back to retest this zone before moving up. Monday, Tuesday, Wednesday will tell us what we're expecting. So if we see a bullish candlestick up here, we may see it come up here, then range a bit before pulling back to this other block and then moving upwards. All right, remember that we marked this on the weekly time frame 1.266, but we're saying that this market may still pull back about 60 pips before actually moving upwards. Only time is going to tell, but we will be looking at this right now. Okay, now let's go to the 4-hour time frame. Okay, fantastic. Now, what we've had so far was we had this descending trend line, and after this descending trend line, we had a break here, and that was when I gave my first buy trade on my Telegram channel. And from here, I mentioned that it was going to come up to this area. Now, you'll be wondering, why did I mark this area? The reason is quite simple. If I take this here and I apply it here, okay, this was the high. What we have here was the price rejected 61.8 pip level and did what? Came to test the extension of 61.8 pip level, which was somewhere around here. And then what happened? The market fell back down. Okay, now that the market fell back down, if we take this and we extend it, okay, what we had here was that the price should move from, say, somewhere around here to this area of interest, this 0.144 level, which was 1.264, which was where I initially set my take profit for this trade. Okay, but what happened was the market came up a bit, then came back down. Now from here to here, right? The market came down to 89 fib level, but this 89 fib level didn't hold because as you can see the market just came down and came back up. So it came back to retest this 79 fib level, and from 79 fib level the market moved up to this point, which was 1.2596, which is the next area of interest for this 79 fib level. If you notice, I used color marking to mark my retracements and extension points. Okay, all right, fantastic. Now I'm going to move what's it called, this to this new high from here, right? Let's move it like this. Okay, fantastic. Now what we had was the first move from here. We had the first move from here to this point. It did this retracement and gave us a move up here. All right, then we now had another move. Let me use the same line chart. We now had another move from this point to this point, gave us a pullback to this point, and then it stopped here. All right, it stopped here. That's the second move. Then the third move was from this point to this point. Then we had a pullback to this point, which is around 50 pip level. And what happened? The market gave us an extended push upwards. That gives you three different moves on this buy. Okay, and those were good returns, just taking the buys alone. All right, so the market has pulled up to this point now. Okay, now what are we expecting from the market? Yes, this is a strong bullish move. We'll be looking at what the market will be doing from here, sorry, from this point to this point. Okay, now what am I expecting from the market? I'm expecting that this market may pull down to this point, which is around 50 fib level, and then move higher again. And now my expected point of interest will be somewhere around here. Okay, will be somewhere around here, 1,001.320. Okay, which will also continue the upward movement. Okay, however, what I have here is the immediate trend line. Okay, what I have here is the immediate trend line, not the overall trend line. This is the overall trend line here, because this is where the trend line got broken, and it has tested it how many times? One, it has tested it the second time, it has tested it the third time. So it is possible that this price may fall down to this area, and if that happens, then we can apply our Fibonacci from this last low. It won't be this low anymore, it will be this one. Okay, to this point. Okay, so let's assume that this move was move one. Now I'm going how do I put it? Okay, so right now I'm going a bit advanced in what I'm explaining, and the reason why I'm doing that is so that you can understand. So let's assume that this is move one, this is move two, this move is sharp, so take note of this. So because this move is sharp, we have this here, this is our move three, which generally stands. So this price may come down to this area. Okay, it may come down to this area, and if this happens, then we may push it higher to let me draw this forward. we may push it higher towards here, which is what, 3.15. Okay, so we may have a move like this. Now, because this pullback here was swift, right? Because this pullback was swift, then we can anticipate that this move would be a corrective move like this. All right, it may be a corrective move like this before we have a bullish move up north. Okay, let me delete this because my chart is getting crowded and I don't like crowded charts. So I'm going to delete this. All right, so what I'm saying here is we may have a corrective move like this. Okay, we may have a corrective move like this to this area, but it shouldn't go above this level, right? It shouldn't go above this level. Then from here, what will happen? The market will buy. Okay, so what will tell us if you're going to have a drop to this point or a move above would be our candlestick setup. So for example, this is what I'm saying. We may have a move like this, right? Something like this. Yeah. Let me move this like this. Something like this. Then this price may break above here. Then we may have a pullback like this. Alright. We may have a move like this. Alright. I hope this is clear. So, what am I saying? The price may buy somewhere around here. The price may buy somewhere around here. Then another buy here. Okay. This is what may likely happen. So, if you notice that the price comes down like this, like gives you a range movement like this, all you simply need to do is get out of this buy here, wait for a buy somewhere around 1.533, take it. When it breaks the trend line, wait for the price to come and retest the trend line around 1.264, take another buy, and then ride it all the way up to this point. Okay, this should give you roughly about 600 and another 500. So that's roughly about 1000 pips on British pounds, US dollar. Not for just this week, it may span for a long time, it may go into the month of July. So this is what I'm expecting on this chart. Overall, I'm still bullish, but I have two options to look at, and that's the reason why I had both trend lines here. So we may have the price here. You have to be vigilant. Okay, so what may happen is you may see the price somewhere around here, and remember that this move has ended, so the price should also still pull back towards this area. Okay, and since this pullback was a sharp move, you can see this move, then we can expect that we'll see a buy here. Once you see a buy, you can take this buy for say roughly 100 pips. Okay, so once you see this buy up 50-60 pips, lock your trade at entry, see what happens. If it breaks this high, then you know that it's going all the way up to 1.30. But if it rejects it and creates a lower low, you come and wait somewhere around here to take a buy, pull back and buy to the higher high. What I'm giving you is a gold mine of opportunities. I gave one on gold, I'm giving you another one on um, British pounds, American dollar. Okay, so this is what I'm expecting on the 4-hour time frame. Next week is going to be a confirmation setup to tell us what to expect from the market, and we would observe what the market is doing as well. Okay, now from here I'm going to, yes, this is the final one, euro dollar. Okay, Now I drew this about 2 weeks ago and I said that this price may come down, retest it and move up. Let me remove this first so that you see what the market did. This is what the market did. And the market gave a nice rejection around here. The thing about candlesticks is candlestick will tell you what the market is about to do. So see this here. So you can see here, this is the end of a bullish trend, and what happened? You had a bearish candle and it pushed it down. Now the same way you had the rejection here, you have like an indecision candlestick here, followed by a bullish candlestick. And what happened? You had a bullish move last week. Now, anybody who trades on the weekly and has seen this bullish engulfing candlestick would have bought on Sunday and probably closed on Friday. Doing that alone would have given the person roughly about 200 pips. You see, without any stress. And I've been talking about EUR being bullish, but for me, EUR is one of the slowest pair in the market, so I usually don't focus on the fact that it actually does move. But the truth there is, it actually does move. Okay, so right now I'm looking at the market and I'm seeing a rejection somewhere around here, and I'm looking at it that okay, is the market going to keep going up? Is it going to keep going up? I'm not sure. Maybe, maybe not. But let's see what happens. So we have this candlestick here. So I take my Fibonacci, I apply it here. I apply my Fibonacci from the low to the high. Alright. And what can we see? We can see a nice rejection around 70.5 fib level and 79 fib level. So I'm expecting that this price should or may move all the way to this point, okay, into this monthly range area. Okay, I'm expecting that the market may move like that before we may see any pullback from here. Okay, remember that the market initially was bullish, market pulled back just to do a bit of correction, came down. So I'm expecting that the market may come up to this point before we may see any pullback here. Okay, but this is the weekly chart. Let's go to a lower time frame. Okay, on the daily time frame, this is what we have on the daily time frame. Okay, on the daily time frame, we have an equal high. Now this does not count as an equal low because if you look at the trend, this is a basic upward movement trend, right? So but you can see that there was a pause here, so the market came up here, came down here, came up here. Now there's a probability that this price will come up here and come down to this point. Why am I saying that? So let me take my Fibonacci and apply it somewhere around here. Okay, yes, fantastic. So what I'm saying is you can see that the market seems to be rejecting this area as at Friday. It is possible that this price will push up, but if I see a bearish confirmation that this price is going to push down, then from say from here, which is 1.099, we may see the price fall back to this demand zone, giving us a proper range, which is a high, low, equal high, and what, equal low, before we continue the bullish movement up. Now I need to point this out. The fact that this price may come down to this point does not change the fact that this market is what, bullish, because this current low is still maintained. So the price may come down to this point, then from here it may move all the way up. Okay, it may move all the way up. Okay, it may still move all the way up. So one of the major reasons why I've not been trading Euro USD or giving trade signals on Euro USD is because most of the time, as I'm looking at it on the daily candlestick, it's within a range. The market can go down, can go up, can do whatever it likes. So I'm just trying to be careful to make sure that I'm sure that the market is bullish before trading the market. So as I said earlier, this price may pull up on Monday here. All right, if it does and rejects it, then we may expect it to come down to this point before doing what, moving upwards to this point. Okay, now if you notice, this low is the same as this low and is the same as this low. Nothing has changed. So if I see a rejection candlestick as I did here, I'll be looking for a sell to this downside and then what? An upward movement. Okay. All right. So let me take it to the 4-hour time frame. Let's look at it together. Okay. Fantastic. On the 4-hour time frame, we had this. For those who have been following me for a while, you would remember this upward movement when I said, okay, the market is now ranging. Hold on. When I said the market is now ranging, and what happened? The market fell. We are looking at the possibility of the market coming to this low, but what happened? The market got stunted somewhere around here, and what happened? The market came back up, broke this trend line, it tested this point, and did what? Moved all the way to the top. Okay. If I apply my Fibonacci from here to here, okay, so see what happened. The price came here as low as 70.5 fib level 79, and what happened? The price came up here. That's the reason why I gave a trade call on EURUSD that the price should come and retest somewhere here. But what happened? After retesting it, the market started shooting upwards. Okay, so we have a new high here. If I'm to drag this here, all right, and put this here, what happened? The market came to 1 to 38.1 fib level and then did what? Shot all the way up here. Okay, shot all the way up here. So you can see here the market is nicely rejecting that area. You can see here you have an indecision candle followed by an engulfing candlestick. Personally, this is an evening star setup on the 4-hour time frame, so there's a possibility that this price is going to come down to come and cover up this gap that has been created. Okay, it's possibly going to come back here to come and cover up this gap. Now, since we are on an upward trend, this trend is no longer valid. I'm going to draw my trend line here like this, follow from the bottom here. Okay, so this price may move down, say somewhere around here. I don't know how well it's going to move, but we'll have to watch what will happen. This is a range market here, down. Now, this is an example of what I was explaining when I was explaining pounds. This candle broke below, but as you can see, it didn't create a new low. Rather, what happened? It came back into this range. So this range is still maintained. This was the resistance. The price came down, came up, reigned here a bit, came up here, came down, came up here, came down here, came up here, came down here, and did what? Broke it. Now that it has broken it, the price has pulled back up to this area. So we may see a nice rejection here towards the downside, and if it comes down here, we want to see if it's going to break this trend line or move up. Now, because the trend overall seems bearish and bullish, I wouldn't want to take this bearish move as it could be an expensive move. Okay, so that's my expectation for this week. As usual, my focus is more on gold, followed by British pounds, American dollar. Then we have euro dollar as well. Okay, if you want to follow me, you can actually contact me on Telegram at BeableFX. Um, so you can follow me. Just chat me up on Telegram. Okay, let me write properly. Chat me up on Telegram, BeableFX, and I would add you to my free signal channel. On my free signal channel, I provide free 500 pips every month for those that are subscribed. So you can join my um, Telegram channel and then take advantage of the market. As in the channel, I post charts real time during the week because I don't have time during the week to create YouTube video. But maybe soon I'm actually considering that I may start trading live on YouTube so that you can also follow me while I trade live on YouTube. But for now, join me on Telegram and I'll be able to provide you real-time information as the market is moving. For now, I say goodbye and I'll see you sometimes next week, say Saturday or Sunday between 24th and 25th. But till then, do take care of yourself. Remember, when it comes to the Forex markets, we don't know the reason why the charts are moving. All we are simply doing is we are speculating. So it's a probability business, but if you're able to manage your risk properly and have the right mindset, using the analysis and the charts that have been provided or the ones that you have done, you can actually trade and make good returns from the market consistently. Till next week, I remain Bearable King. To have a lovely week of trading. Bye bye.